Welcome back to the channel. All right, so now we have a lot of interesting things to look at. All right, it's been a few days since we saw the drop and we saw Bitcoin reach into the zone that we talked about recently. We've seen interesting activity on Ethereum hitting all-time highs. eGold is looking really good. Cardano is also looking like it's making some activity. All the charts are looking interesting, so we have a good amount of stuff to go over today. Now there's something that I want to start with, all right? And I'm going to get to that. I talked about something on Twitter, so we're going to get to that question on Twitter, and we're going to get to, I'm going to look at the comments. We're going to see what everyone said, and then I'm going to show you what I was talking about. Before we start, make sure you like the YouTube video. Make sure you subscribe to the channel. Leave me a comment. All that stuff helps out the channel. Feel free to check out the Twitch. Every video you see here on YouTube is live streamed on Twitch, so you know, the reason I do that really is because sometimes the information that I give out during these videos and streams, they can be very useful for certain people. And if you get to see it on Twitch, you get it right away. You get it live. On YouTube, the video could be delayed by an hour or two, sometimes longer, because YouTube takes a long time to run its checks and all that stuff. So if you want to see these videos live, make sure you follow me and subscribe on Twitch. You'll get to see everything live there when I go live. Follow me on Twitter too. I put out notifications before I go live. Like, subscribe, let's get started. Here we go. We're going with Bitcoin and we start. So the first thing I'm going to do is I'm going to hit up my Twitter real quick. All right, so we're going to look at what I posted on Twitter just a little while ago. And I posted this about an hour ago, okay? So I said 2 days ago, something happened on the Bitcoin daily chart that we have not seen since July 18th, 2020, when the price was 9K. I will review it when we do the TA session in a few hours. That's now. And until then, does anyone know what it was and why it's so important? So let's see what the answers we got. So the level said the RSI dropped to its lowest point since March 2020, COVID time signaling a heavy level of overselling. So that's definitely interesting. We're going to see if the RSI is what I was talking about or not. Dino said, I don't know, but I'm more excited than ever to see the stream. Thank you, Dino. Gyochi said the same thing. And Jay says the 50 moving average. So we're going to take a look at the 50 moving average too and see what that's about. All right, let's see if there's anything else. Nothing else for now. All right, so let's take a look at exactly what I was talking about. All right, so the first thing is the 50 moving average. All right, what Jay was talking about, that is this moving average right here. You can see it's in blue if you look at the indicator at the top right. So the blue moving average, the blue is the 20 EMA. So the 50 is the orange, okay? So the 50 moving average, if we're looking at what Jay was talking about 2 days ago, on the daily chart, we've actually started to come back and touch the 50 moving average. Now, that has happened way before July, since we've come back and touched that. But, I mean, that would have been in this area when we dropped back down. So this would have been in September. So that happened a little bit after July. But either way, that wasn't the one. That is still an important thing to look at. So we're going to get back to that. The other thing that was mentioned was the RSI dropping back down to the oversold territory, and that's here down at the bottom. It's sitting at around 30 right now on the daily chart. If we go back, the last time the RSI was down at that level was also in September, where it started to hit the oversold level. It didn't go as far. It really was oversold in March. So that's still not exactly what I was talking about. I mean, but you know, that was made pretty clear on Twitter by whomever left that comment, right? Because they said that RSI got oversold in March, and they're correct about that. But that's not what I was talking about, all right? So what I was talking about is something entirely different. Now, the first thing, before I get into that, I want to show you what we had talked about happening before, is we had talked about coming into this zone here, all right? And if we go in, and let me go over the 4-hour chart just so you can see that this did kind of play out how we talked about it. When we talked about what was going to happen, we talked about coming into this zone at the bottom. I said that I doubted we were going to go below this zone, but you may have good buy levels around 48,500. It actually went a little lower than that, so you would have been able to buy as low as 47,100 if you had put an order down there. I bought at 48.5 and I bought at, I think, 47.9. I think those were the two levels that I had in this area, and both those triggered, so I was happy with that. But our prediction was that it would drop down into this area, it would come back up and trade sideways, and then likely come back into the top zone. So that's what happened. We didn't predict a second drop, but that got bought up very quickly. So I'm not really counting the wick. I think that our prediction was pretty good. So if you watched the last video, you might have been able to pick up some Bitcoin in this zone. I hope that you were able to, but let's go ahead and move forward now. Okay, so what I was talking about that hasn't happened since July of 2020. If we go back to the daily chart, all right, first thing I'm going to do is I'm going to remove all these indicators. Now, this is very, very important, so make sure you pay attention to this, all right? I'm going to turn on the TD sequential. Now, on the daily chart, what you are seeing here is you are seeing the TD sequential has flashed a red 9. All right, the TD sequential has given us a buy signal on the daily chart. Now, this may not seem too important to you, but let's start looking at why it's important. All right, first thing I'm going to do is I'm going to turn on this. I've created a bunch of indicators here that show us every time the TD sequential 9 flashes have occurred. All right, I'm actually going to zoom out to the monthly chart. So here you can see throughout this entire area, and look at the bottom, we're going from 27 all the way to now. From 2017 all the way to now. There have only been a handful of TD sequential 9 flashes. All right, and let's look at the areas where they occurred. Okay, so these blue lines all represent TD sequential 9 flashes on the daily chart. Because you're looking at it on the monthly chart and we're zoomed out so much, they're not showing as 9 flashes. But if I was to switch back to the daily and then zoom out here, you'll see that if I zoom into any one of these lines, you know, I've marked all of them exactly as they should be fit. You know, these are all red 9s on the TD sequential. Now, what is this really telling us? All right, let's go back to the monthly so we can take a look at this in that bigger perspective. Okay, what this is telling us is, well, first of all, we can correlate a couple of lines, right? You see the last big move up we had was around here when Bitcoin went up to 20,000 in 2017. That was the big bull run that we had. After that, the price started falling back down until it consolidated and we got into this bull run. So what does that tell us? That tells us that before the big move up, we had a TD sequential 9 flash. Now let's compare that to our current move up. Before it went up, we had a TD sequential 9 flash here. Now, what happened after this big move up? We started to have a downtrend. And during that downtrend, even though we had a bunch of TD sequential 9 flashes, the price kept moving down. But if we now zoom in and look at this at the daily chart and look at it at a more micro level, all right, that's the macro level. If we zoom out here, okay, and we go back into this daily chart, into those areas where these 9 flashes occurred, let's see what was actually happening. And what I'm going to do is I'm going to get rid of the TD sequential to clean up the chart a bit. Now, what you can see when we zoom in on this is that the majority of these 9 flashes result in some type of uptrend. All right, so you know we have this 9 flash here, and after this 9 flash, we had a massive, massive rise, right? This was basically the start. Right after this 9 flash occurred, we started the massive uptrend all the way up to 20K. On the way down, we had another 9 flash, and what did that tell us? That told us for the time being, the downtrend has stopped, and we had another major uptrend. That was between February 2018 and March 2018, right? The price went up a total of roughly, 50% after that 9 flash. Now, if we look at the following 9 flash, you'll see the price went up slightly, but then dropped. The next 9 flash was also a signal of an uptrend. Now, the reason I'm showing this to you is because the majority of the time we have one of these 9 flashes on the daily, even if it happens at a point where we're in a major downtrend, they still signal the shorter uptrends. Okay, so it's giving us a signal when the price is shifting direction. Now, we see that a lot of these during a bear market, right, when the price drops down significantly, I mean, this was after we had a top here, and then the price went down 70% until the 9 flashed. Okay, so we had a massive downtrend, and then the 9 flashed again, signaling the bottom had been reached, and it turned. But then it kept going. So these ones we can kind of wipe out because these don't matter in the scenario we're looking at now. We have another one here. This one also, small uptrend after the 9 flash. This one actually had the minorest of uptrends, right? If you go in here, it had maybe one green candle and then the price plummeted. So it's not every time going to be accurate, but keep in mind, this was during the bear cycle. So let's delete these ones that are all during the bear cycle because right now we're in a bull market. Okay, and what are we left with now? We're left with some other ones here. These were right before the price crashed because of COVID. So we can't really count these right now because the price the price is doing something very different. It's in an accumulation phase. What you were seeing here was 2019. 2019 was still, it went up significantly before 2019, but then the price started consolidating as the economic crises were starting to come up. During this entire time, we were starting to figure out about COVID, what was happening. Then we came into early 2020 and we had the massive crash. So let's get rid of these for now as well. What we're focused on are in the same areas that we were here. Now, what you can see very clearly from what we're seeing now in these key points is that these two correlate. All right, so this 9 flash was right before a major uptrend. This 9 flash was right before a major uptrend. In this one here, we did not see another 9 flash like I just showed you until the price went down 70%. This time, we are seeing a 9 flash on the daily when the price has only dropped 20%, 28%. Why did we not see that the last time? The last time we did not see that because it was not turned around yet. It was still a major downtrend. This to me is a pretty clear signal that a major downtrend is likely not going to occur. And the reason for that is because the momentum has shifted so early that in a major downtrend, if this was really the start of a bear market, like the news will have you think, and a lot of people that are just shilling crypto on Twitter are going to have you think, you know, a lot of the people who talk about this, the big crypto analysts that are online and work for hedge funds and stuff that talk about, oh, Bitcoin's going to go back to 20K now. You know, it couldn't hold 60,000. They have said that every single time. I've seen people, those are the same people that at 40,000 were saying Bitcoin's going to go back to 10,000. At 50,000, they say Bitcoin's going to go back to 25,000. At 60,000, as soon as it drops to 50, they say Bitcoin's in a bear market, it's going to go back to 20,000. It's the same thing all the time. And a lot of these people, they have a vested interest in the price going down because they want to buy it cheaper. You know, that's what the rich want to do. They want to scare people out of it. The price goes down and they can accumulate. It's a very, very normal strategy. People have done it with other coins as well. Smaller groups have done it with other coins and they've done it successfully. It's a little harder with Bitcoin now because I'm going to show you why it's a little harder. But basically the whole point of this is that if we correlate this 9 flash with the one in 2017, it led to a major bull market. Now we had a similar 9 flash that led to a major bull market. And honestly, what I think is happening now is we're seeing another 9 flash in the middle of this, which indicates to me that this is not done. This is something that is going to lead to a shift. Now, you could go sideways here, but having this signal here, whether you go up and then down like you did after this 9 flash, I mean, look at it, what happens if we zoom in on this, on the previous 9 flash, right? And I was there for this 9 flash. We had the price go up from around 9,100 all the way up to 12,000, and then it went back down to like 9,900, you know? So it went back down about 3,000. That might not seem like a lot, but at the time here, that was a pretty big drop. And who do we have? AM Addict is now following. Thank you, AM Addict. I appreciate that. So basically what I'm telling you now is that this signal is rare. This is not a normal signal during such a big uptrend. Usually it's going to signal a major downtrend if it happens after a huge drop. This is not a huge drop. This is a small drop. Momentum has shifted and it's starting to shift back. And most of these are also going to occur when you have a shift in the MACD. We have a major MACD shift occurring now too. That's also very key because this is these major MACD shifts happen at the RSI. Okay, so now we're going to get into RSI, which someone else mentioned, okay? So this is one thing that's telling us that likely Bitcoin is going to continue moving up, and we have a pretty clear signal that that's going to happen. I think part of the reason we saw this uptrend from traders starting to buy Bitcoin is again because they saw that 9 flash, and that is rare. That is very, very rare. It doesn't happen often during a major bull cycle, and when it does happen on a chart like the daily, it's a huge indicator that price is not going down anymore. Okay, so now we are going to turn this off. We're going to go to the RSI bottoms. Now, these green lines are showing us where the RSI bottomed out. So I want you to look at the bottom of the screen where we have the RSI here. Now, what you see on the RSI, each of these horizontal lines, or I'm sorry, each of these vertical lines coincides with when the RSI dropped down to the oversold level. All right, every single one of these corresponds all the way back. And we have another follower, Jaja, thank you, I appreciate you. And if you go back, you'll see this has happened a number of times, but the key thing, and I'm going all the way back to like 2015 with this, but the key thing to see here is that every single time one of these lines shows up, the RSI trends up. volume usually spikes, and we start to see a major shift in the upside. So we saw it get oversold here, it shifted up. We saw it get oversold here, it shifted up. Oversold here, shifted up. Every time it oversells, that's an indication that the price is shifting, okay? So let's move forward. We saw the RSI. The last time the RSI got oversold like this in our current cycle was here. This was September of 2020, also right before we started this major run. Now, let's correlate two things, okay? 2 days ago, we saw two things happen, all right? Remember, this is the daily chart, so this is all 2 days ago. We saw two things happen here, all right? I'm turning on the TD sequential. We saw an RSI bottom get hit, which signals a major uptrend coming, right? We also saw a TD sequential 9 flash, which signals an uptrend coming. We have two of the most clear signals flashing 2 days ago that Bitcoin has reached a temporary bottom and is likely going to shift direction. And if that direction shift continues over the next few weeks, we could very easily be looking to break past our previous all-time highs and go into the $75,000 to $85,000 range. I would keep a very close eye on that. The RSI on the daily right now is looking so good. It's looking better than it's looked for the last few months. And the fact that that RSI bottomed the same day we saw a TD sequential 9 flash is like a golden indicator that things are going to turn around. As soon as I saw that flash, I just went and did a spot buy on Coinbase because I was like, okay, I think it's turning around. There's no point trying to set a lower order. It's going to shift and go in the upside. And that's exactly what happened. Sometimes these indicators are so clear that you have to just follow them and hope for the best. And that's what I did. And it turned out to be a pretty great move. That trade netted me about 15 to 20%. But I haven't sold. You know, I don't plan on selling. That was my last accumulation trade before the uptrend occurred. So that's what I wanted to show you. There are some pretty clear indications for why you shouldn't be listening to, you know, mainstream media right now trying to convince you to sell your Bitcoin. That's a pretty stupid thing to do. Anyways, let's move forward. That was the major thing for this. Now I'm going to go back to... I'm going to turn off the TD sequential. We'll turn on the moving averages. I'm going to go back to the main indicators, all right? And we're going to go back to the 4-hour chart and do the normal analysis. Okay, so the one thing that we're seeing here on our normal analysis is that we have got hit resistance at the 100 exponential moving average. Now, the 100 EMA is an important moving average, and in this case, the 50 EMA has fallen below it. So has the 20 EMA. So these death crosses that occurred up here resulted in, you know, it was a signal for this downtrend. A10 phones, thank you for following. I appreciate you. Let's see. So we had this downtrend coming, and now what this is telling us is that this is starting to shift, right? Our 20 exponential moving average is starting to shift upwards, which is obvious, right? The price has started to go up. But the fact that we're hitting resistance here at the 100 EMA is very, very important because this tells me that in the short term, if we don't break past this and break above the 200 EMA, which is the red line, we could be looking at a little bit more downside. And if we are looking at a little bit more downside, what I'm going to assume is that the price is going to come back and touch this area again around 53,300. This is the bottom of this zone. These zones have been very, very clear. I told you that if we go into this zone here at the bottom, we'll likely come up, trade sideways in the area where we are like in between the zones, and then we'll likely move back into the upper zone. We've done that. At this point, if we keep hitting resistance at the 100 exponential moving average, we are likely going to see us drop back down and test the two other moving averages here, which is our 50 exponential moving average and the 20. So I would say at this point, if you're looking to buy Bitcoin cheaper, if it's me, I'm putting my buy orders somewhere around 53 and 53.5. That's kind of where I would be putting in buy orders now. Now there is a chance that if it goes down here, the price could drop like this and then wick down and get bought up very quickly. That's another possibility. It maintains this uptrend. So that's very possible. You might be even able to pick some up at 52,000 or 51,500 if you get lucky and it drops down, because I feel like if it drops down to those levels, it's going to get bought up pretty fast. You may not have the time to do a spot purchase, right? It could happen within 15 minutes that it just drops and comes right back up. So keep that in mind. That's what I'm looking for the short term. That would probably be a good thing, because if that happens, the 4-hour RSI will kind of go down a little bit and put us back into that territory where it can keep shifting up. And the key right now is to see us break two levels, for confirmed uptrend, all right? And keep in mind, we also, where we hit this resistance, it was right at our channel line. So if I zoom out, you'll see that we created this blue channel a while ago, right? Maintaining our region of uptrend. And you'll see that's exactly where we hit resistance this time. It's exactly where the 100 exponential moving average came and is touching right now. So we need to break out, and we need to break above the 55,900 mark. So basically we need to break above 56K, which is this red line you're seeing in the middle of your screen. If we break above that and then come back down and flip this blue line as support, that means that we are putting to move something like this, going like that, coming back down, flipping this as support, and we can continue an uptrend. But I want to see that be a slow uptrend. You know, the slower the uptrend, the better the RSI. But that's what I'm looking for right now for the short term. Another drop, like I said, is likely to get bought up quickly because we are seeing such a big shift in momentum. Now, unless there's some more FUD that comes out, some news that comes out that scares the market again, then you could see a drop back down into this bottom zone. But I have a feeling if we do go back into the bottom zone, you're going to see what you did last time. You're going to see a bottom of maybe around 50K, 48 if you're lucky enough to buy there. But then you're going to see it get bought up because there's just too many buyers at that level. No one wants to give up the opportunity of buying cheaper Bitcoin these days. So if it goes back into this level, I think that that's going to become cemented as the bottom. So I think anywhere below 52,000 is really a good buying range. It's just up to you where you want to set your orders and if you get lucky enough for them to trigger. I think after we're out of this level, we're likely going to get back to trading within the $60,000 range, and that's probably only a few weeks away. So you may not have too much time to buy more Bitcoin at these levels. Okay, that's everything for Bitcoin. My analysis, along with the major indicators that on a macro level are showing us a much bigger uptrend coming. So keep it all in mind. I'm going to keep looking at those. I'm going to keep all these horizontal or vertical lines that we created. I'm going to keep them in our chart so we can take a look at them. The final thing to look at here is the Fibonacci retracement. This Fibonacci retracement is very rudimentary. I haven't taken it from the exact levels that we'd want to look at. I'd really want to take this back further down to this level here to look at the overall chart and give us a better and more accurate Fibonacci. But this is more of a short-term retracement. And this shows us that we may hit resistance as well on our way up as we reach the 55,500 mark. So pretty much everything, even the short-term fib and the longer-term channels are showing us resistance around 55 to 56K. So keep an eye on that. Bottoming out here, this is showing us that our next support level is going to become 50,600. So gives you an idea of where you might want to put your orders in for now. Okay, anyways, we'll go back to the indicators. We're going to save the chart. Remember, the chart's available in the description below. You can take a look at it whenever you want. All right, next thing we're going to look at is this here. I'm going to switch to full screen mode so you can see this a little bit better. Okay, so basically what this is showing you here is this is basically showing us the time that Bitcoin had. Okay, so the amount of Bitcoin that's being spent based on its age. All right, simple to explain this. You'll see the first thing up here says 1 hour. This is in very light yellow. So this is everything that's up at the top here is all within the 1 hour mark. It's Bitcoin that's being bought. So anywhere 80 to 90%, like the top 100% of the Bitcoin that is moving day to day is all Bitcoin that's being bought and sold in the last hour. So it's just trading activity. As you go down here, you'll see there's a bigger amount of Bitcoin that is falling within the 1 to 24 hours. So the majority of the Bitcoin that's being bought and sold, it's all being bought and sold within a 24-hour period. Then as we start going down a bit and we look at this one here is the Bitcoin between 1 week to 1 month old. It's not moving as much. So people that have bought a week ago to a month ago, they haven't really been doing much with their Bitcoin besides holding it. You go back a little further to 1 to 3 months and then 3 to 6 months, and almost none of that Bitcoin is moving. What this is showing you is that the majority of older holders of Bitcoin, of the people that are hodling long-term, they aren't concerned with any of these drops. They are not the ones buying and selling Bitcoin. They're probably the ones buying it. You know, they're buying all the dips most likely, but none of their holdings are being sold, or a very small amount of their holdings are actually being sold. This is an important thing to see because if you start seeing the older Bitcoin moving up on this scale, like something like this, like these peaks, you know, that's not really a good sign. That means that the older holders are starting to get scared and they're putting money back on exchanges and they're trying to sell. So right now, what this is showing is that the older Bitcoin is actually still dropping in the amount that's being put on exchanges. That's really good. That means that overall market sentiment for people that have been in Bitcoin for a long time is that they don't want to sell. The important chart to look at, let's go ahead and move back to our normal view. All right, and we will close this one out. The final thing to look at with Bitcoin is ViewBase. All right, ViewBase is giving us information on the amount of Bitcoin that's moving on exchanges. So let me zoom in on this. The first thing we want to look at, and we're going to look at this total number down here. All right, the first thing we're looking at is in the last day, 5,500 Bitcoin has been moved onto exchanges. Okay, if we look at the last 7 days, 31,500 Bitcoin has been moved onto exchanges, with the majority of it going to Binance and to Bitfinex. We look at the last 30 days, and it's a total of 8,490 Bitcoin has been going on to exchanges. So in reality, for the last 30 days, it's not looking that bad. In the last 7 days, this is slightly concerning because you see a lot of Bitcoin coming on to Binance and to Bitfinex. Now, we don't know if that's the exchanges taking Bitcoin from their own cold storage, putting it on exchange to make it available to their customers, or if it is people putting their Bitcoin on exchange because they want to try to sell or take a profit. And happening in the last 7 days, it's understandable because the market was moving down. So you could have had people just, on the side of caution, taking their Bitcoin from cold storage, putting it on exchange in case they want to sell. It's available to sell at any time they want. It's always a metric you want to look at because this, if a large amount of this Bitcoin that's been moved onto Binance or Bitfinex starts getting sold, then that could, give us a reason why we may see a drop down to this level or even down to this level at 50K. So something like this happening before a longer sustained uptrend, but still maintaining the overall uptrend line, it's a possibility. So keep that in mind. You want to always take a look at ViewBase and look at the exchange flows. All right, looking at those exchange flows is quite important. It gives you a lot of information. Lucian, thank you for following. I appreciate you, man. Let's see. Next, we are going to switch over to Ethereum. We've pretty much done everything for Bitcoin. All right. So on Ethereum, it's quite clear what's happening. We're seeing a new all-time high. We talked about this last time. Ethereum making its recovery pretty quickly, going above this level and breaking previous all-time high is a very important thing to see. And if we saw that, what I talked about seeing next was coming back down and testing this level. We really need to flip 2,500 as support. It has been resistance every single time. We saw resistance here. We saw resistance here. This is the first time that we've broken 2,500, that we actually traded on it for a while and then broke. So each of these times we didn't really trade at that level. We just brushed past it and then came right back down. This time we actually traded there. The fact that we traded there is telling me that if the price comes down, it is likely going to get support at 25, and you may not be able to buy Ethereum at much lower than 2,500 again, because if it goes down to those levels, there's so much support here that you're likely not going to see it drop any further. It'll probably go down to 25 and then keep its run up. That's the most likely thing to happen, unless there's some crazy news, that's likely going to happen. Now, the other thing to note is that the 20 exponential moving average on the 4-hour is already starting to come up to the 2,500 level. As that reaches the 2,500 level, that's another major indication that we'll likely see support there. If for any reason it falls below 2,500, expect support at around 2,430 and at around 24. So 2,430 to 2,400. I don't really see us falling below the 50 exponential moving average for Ethereum. Ethereum's looking extremely bullish right now, and to be honest with you, it wouldn't shock me if this, just results in a very minor consolidation back down to the 2,500 level, and then we see a further breakout past 2,800, 2,900, and getting close to 3,000. I think that Ethereum is headed for 3,000 most likely within the next month. Probably sooner than that. Sometime in May, I think it's going to break 3,000. So it's something important to look at. Ethereum is looking like a great long-term investment right now. As of right now, there really isn't any sign of Ethereum moving with a major downtrend unless we see some massively terrible news or something else happens that we just can't anticipate. Chart-wise, it's looking very, very bullish. And it's been looking that way for a while. I was telling you that I think Ethereum was going to break $5,000, $6,000 when it was down here at 1,500. So the fact that we are on our way there is not shocking at all. It's just a matter of where do you get in, if you want to accumulate any more. And right now, 2,500 looks to be the point. Anywhere between 24 and 25, it's worth putting orders. But having those orders trigger, that's another question. How long you plan to stay in, that's your question. What kind of risk management you're going to do if you do buy it at 25 and then it drops down to 21, are you going to be able to deal with that drop? That's that's something you got to figure out. All I'm saying is that if I'm placing orders for this now, I'm placing it between 24 and 25, and maybe lower than that if I want to try to get lucky. But I don't know if that's going to happen. It's a little too bullish now to see that kind of sell off, right? Because the major volume hasn't even come in yet. When that major volume comes in, I think it's just going to spike up further. Okay, so that's pretty much it for Ethereum. We didn't spend too much time on there, but I have made my Ethereum chart available online now. So if you want to see the Ethereum chart, check in the description of the YouTube video. The link will be there starting with this video. All right, finally, we get to eGold. All right, eGold. All right, now with eGold, we are seeing something very interesting. Obviously, we had a zone put out here, and I told you that if we dip into this zone, we'll likely trade there and then break back out. The key with this was to come back into this yellow trading channel, right? This was our major uptrend, ascending trading channel. And now we are back in that trading channel. We still need to, let's zoom in a little bit further here. We still need to drop down a bit and test this yellow line to confirm that we are really trading in here, or we need to jump up and get to the median of this trading channel, which is going to put the price at around 200. Right now, it is at a pretty crucial point because we are testing the 100 exponential moving average, and we are getting to a point where all the moving averages are getting constricted. The cool thing about this is, though, if these moving averages continue to get constricted and the price continues to slowly move up, you are going to have a golden cross occur where all of these moving averages reverse, and as that happens, they are all going to go back to the levels they should be going to, and this golden cross will be a major indicator of a sustained uptrend. And when that happens, you're going to see a lot more volume come in, because as soon as that kind of trigger happens on the chart, like that kind of indicator gets triggered, traders see it, and they use that as an opportunity to buy. Golden crosses are big. This was a death cross, right? The death cross happened up here. And when this death cross happened, we weren't super concerned about it, but it turned out to be completely legitimate and indicated a big downtrend. Similar to this death cross, a golden cross here would tell us that a major uptrend is going to begin. So that golden cross hasn't quite happened yet, but looking at the way it is looking right now, it could only be, I don't know, maybe 3 days away until we see a golden cross like right in this area. So keep an eye out on it. On the 4-hour chart, seeing a golden cross is a pretty decent indicator, but once you start seeing something like that on the daily, that's when things get super interesting. And we are not quite there yet on the daily. We need to maintain this trading channel for at least another month until we see a golden cross on the daily. And if we see that golden cross occur on the daily, things are going to get really, really, really interesting. It's going to be difficult for that to happen because in order to see a golden cross here, we're going to have all of these moving averages get really constricted. You're going to have to see a death cross first to give us a somewhat of a downtrend. But then if you see a golden cross on the daily, things get nasty. So don't hold your breath for that. It's unlikely to happen on the daily chart for quite a long time. That's why we look for these on the 4-hour, 8-hour, 12-hour. And on the 4-hour, it's getting pretty close. So make sure you look at that. The other thing that I would say about eGold right now is that it's not surprising at all what's happening here. We are still maintaining a very, very large uptrend. And honestly, at this point, part of me wants to take this and move this down to this level and extend our entire trading channel. But I haven't done that yet because I want to see how the price interacts with this line first. So I'm leaving it as is, but we may be extending this trading channel and it might give us a much larger and longer trading channel to look at because we did set a new bottom here. Now, setting this new bottom is super interesting because it happened right in the zone that we were talking about. And I'm going to have some new zones for you in the coming weeks. And if we continue to see that these zones are exactly where we, have our bottoms, then we know where to buy. I mean, if you were following this channel for a couple of weeks, then you might have been able to buy some eGold very recently at 140 because that's where I placed my orders and I picked some up. So I know I mentioned 135 as the max, and 140 is where I would place my orders. I said that last week. So if you were able to put an order there, you've already made a decent profit. And no, well, not a profit, but you've already made some decent unrealized gains, right? Because if you're selling the eGold, then, you know, that's likely not a smart decision. In my opinion, this is one to hold. But that's me. That's what I'm doing with it. Okay, otherwise, nothing major with eGold as far as the chart goes, and that's a good thing, right? The chart is looking really, really healthy. The RSI is looking good. If we go back to the daily chart, you'll see that the RSI came down and touched the 40 level, which is perfect on the daily chart. You're also seeing on the daily that the MACD is flipping just like Bitcoin, and you're gonna see a nice MACD cross occur very soon. That's gonna signal an uptrend. You see, if we scroll, if you look at the MACD down here, you see this orange line and this blue line. When you see the blue line go below the orange line, okay, so when that cross occurs, like it occurred right here, okay, you see that? When the blue line went below the orange line, that signals a downtrend. When you see the blue line go above the orange line, that signals an uptrend. So that MACD cross has not happened yet, but as the price starts going up and the MACD flips and we see that cross, that's going to be another major indicator that eGold is likely going to come back up. And I think the next time eGold hits resistance, it's probably going to be at around 250. You know, that's where it's going to hit major resistance, and we might see it come back down to 200. Like, we could just keep bouncing around in this channel for a little bit of time, right? We bounce around like this, and then eventually we'll break out of here. But if we bounce around like this for a while and maintain this uptrend, makes a lot of sense, but I would love to see us just break out of it. I just don't want it to happen too quickly. So right now, you shouldn't have any major concerns with eGold. People keep asking me, like, I've gotten a question about this on my Twitter feed. I've also seen this in my DMs. People asking, is eGold a scam? Now, there are scam tokens out there. They definitely are. People try to do exit scams where they get you in, they want you to listen to all of their Twitter nonsense and get you to buy their token, and as the value goes up, the people that minted it just sell all their holdings and then they leave and the website goes down. You never hear from them. That's considered an exit scam. Now, a Ponzi scheme is a little bit different. It's where you try to spread the word about your thing. You get people to come in and start spreading the word for you, and there's no real utility with the software or with the blockchain, and then the same thing happens, right? Value keeps coming in until the people who are buying at the high levels become the bag holders. That's a Ponzi scheme. eGold is none of these. First of all, it's not an exit scam because it's been going for way too long, and there's way too many partners and development happening on the Elrond blockchain for it to be an exit scam. It doesn't make any sense, right? So it can't be an exit scam. We know that for sure if we know anything about Elrond, and for the people who do know about Elrond, you know it's not an exit scam. So anyone who's calling it an exit scam online, they're idiots, or they're just literally trying to, you know, shill the token because they've made bad trades, or maybe they bought low and sold before the bull run happened and they're salty. So there are people like that. Now, why is it not a Ponzi scheme? Well, because nobody's really nobody from what I know is really going online and telling people to buy Elrond. You know, I don't want people to just come in and start buying eGold. Like, no, I want the price to stay as low as possible for the long term so that I can keep accumulating it, right? If I'm coming on here and just saying, you have to buy, like, and I go on my Twitter and I just say, buy eGold, it's the best. Like, that's not good for the network. You don't want people to adopt it just to make quick gains and then sell. Right? The people that, for the most part, have been getting into eGold have seen it as a long-term investment because of the fundamentals of what the blockchain is looking to achieve. It's basically looking to achieve, you know, the merits of one of the top DeFi platforms available, you know, and it's not even going to compete with other DeFi platforms. It's going to be able to integrate with a lot of them. So the fact that they're doing all this and they have a massively scalable network is pretty incredible. It is by no means a Ponzi scheme because you have nothing to gain by, you know, getting a quick 20% return and then selling out. The real gains to be made with eGold are to accumulate long-term and to stake it and get those rewards, because if this is something that is really going to go up to 1,000, 2,000, or 3,000 over the coming months and years, then, you know, what's the point in getting 20%? You know, you want to get 1,200%. You know, so that's the thing. This, in my opinion, there's no merit to it being an exit scam. There's no merit to it being a Ponzi scheme. So the people that are giving you that information online, They likely have been salty. They've likely lost money due to bad trades. They have something against the Elrond Foundation. I can't tell you what it is. Or at the very, very least, they've done no homework. And, you know, there are people who do that. People that just talk without any knowledge. Do the homework. Read the white papers. Read the blogs. Read everything. Find out about the partners. Find out about the scale of the network, the number of transactions, you know, how the economics work. And then you'll make a good decision. That's pretty much it about eGold. I can't stand when people try to give that salty information online without any knowledge. And then you ask them, why do they think this is? And they're just like, well, because it is. It is a Ponzi scheme because it is. Like, that's nothing. That's useless. That's dumb information from stupid people. Don't listen to them. Okay, the next thing that we're going to take a look at and wrap up today with is Cardano. All right, that's going to be the last thing for today. With eGold, I mean, I think if you've been in this for a while, this shouldn't scare you. This was just a nice buying opportunity. To be honest, I hope that we come down to this level again. I still have an order sitting at 140. I don't know if it's going to hit, though. I feel like it's more likely to hit 200 again before it goes back down to there. It may not even. But if it does, just in case, I already have an order sitting there. Okay, next, Cardano. So with Cardano, we are still trading at this insane level right here that we've been trading at for so long. This major trading level between like $1.10 and $1.30. We have hit the $1.30 mark so many times. Like, literally, we have hit this level numerous times. And it has been pretty stable. At this point for Cardano, I'm expecting trading between $1.25 and $1.45. What we really need to see with Cardano is for this uptrend to be maintained. All right, that is, let's get a, where is it? We don't want a horizontal. Oh, there we go. We want a ray. So basically, we want to see this uptrend stay maintained with Cardano right about here, which means that the key is if we want to maintain this uptrend, we can actually put this down a little bit more. Maintaining it right there is sufficient. Heck, even right there is not bad. So this is a little bit more feasible, but to maintain this uptrend, we want the price to, because these were all pretty major wicks on top. You know, let's be a little bit more conservative. So at the very least, we want to see the price of Cardano over the next 2 weeks come back up and cross the $1.50 level, right? If it happens sooner than that, that might not be a good thing because you'll see the RSI on the 4-hour is already getting slightly overextended. So if the price of Cardano just keeps going like this, that's not really good for the RSI. It's going to get really overextended like that and likely take another dip. So seeing Cardano make a slower, sustained uptrend throughout May until it breaks out of this $1.50 to $1.60 resistance level is going to be crucially important. But I still think long-term Cardano is looking like an amazing project. The staking for Cardano has been going super smoothly, has been working very well for a long period of time. The stake pools are increasing. The amount of people staking their Cardano are increasing. The information that Hoskinson is putting out about new functionality and projects moving to Cardano is quite bullish. It's looking pretty bullish for the value of the blockchain. So overall, there's really nothing negative, and that's why you've seen it recover so quickly from this dip. Now, until we see the price cross over this red line, which sits at $1.46, I wouldn't hold your breath for a breakout past like 150. The reason for that is we still have this major resistance line that we haven't hit yet, and this is an upwards trend line that basically correlates with where the price move started. And we had been above this for a very long time. This entire period of Cardano, we were sitting above that trend line. And now for the first time, we've broken below that trend line here, and we are now coming back to test it. So these major trend lines, you don't normally just break through them very quickly. Seeing a little bit of sideways trading at the $1.20 to $1.35 range is probably what we're going to see. Something like this, we may even see it drop back and then come up like this and then dip down a little bit until you break out of here. So that could take as soon as May the 6th, May the 7th, or it could take as long as May the 15th, May the 20th, like somewhere in this area. So keep it in mind. Cardano, I think, is a safe bet. It's not one that anyone has really lost a lot of value in. It's been able to maintain value throughout this entire crazy market. And on top of that, it's been one that has consolidated enough that when it does break out, it's probably going to be a pretty monster breakout. So Cardano is one that is worth accumulating. I mean, right now, my buy orders for Cardano would be basically anywhere above $1.10. I think that's a decent place to buy it. You know, even spot buying it right now, long term will probably be a good decision. But short term, you may be able to get luckier and buy it at around $1.10 or $1.12 if it takes another dip. It might not, though. That's one of those things where, you know, you could put your order at $1.10, but then if it just keeps moving up with this trend line here, you may just miss out on a chance to get it at $1.30, right? Because it's only hit $1.30 a few times, and it's usually either dipped back down into this zone or it started an uptrend right after. So we don't know how it's really going to interact with this price level now that it's put in so much support below it. It just seems unlikely that it's going to keep dropping past 125. So keep an eye on Cardano. Overall, it's looking really good. I don't plan on selling any of my Cardano. I haven't been accumulating any more Cardano either. I've been accumulating Bitcoin and eGold. That's how I plan to continue doing it, because I accumulated my Cardano at very, very low prices. I bought the majority of my Cardano when it was 8 cents to 11 cents. So I already have what I want to have. You know, my position in Cardano, I didn't really look to increase it any more than I did because I bought a significant amount at those prices, so there was no reason to buy any more. And even though I have a major profit with Cardano because I bought it so low, I haven't sold any of it because I still think that staking it is my best option, right? I could take out my initial investment if I want to, but I don't want to. So I'm not going to. That's pretty much it. All right, we have gone over everything. Make sure you check the description below for any of the charts. Any questions you have, put them in the comments. Hit me up on Twitter. Follow me on Twitch. If you subscribe on Twitch, you will see my Elrond NFT pop up on screen, and it'll be on the YouTube video with your name. We have not seen it yet. We have only seen the follower, the follower image come up with a few people following me on Twitch. So somebody... Okay, so there's the follower image that we just see by XFizz. Thank you for following XFizz. But when we have a subscriber, we're going to get to see that Elrond NFT show up. So we'll see. We have plenty of time to see that. It'll come back in the future. I'm sure someone will sub. Just make sure if you sub, you wait for me to record, and you do it during the YouTube video so everyone gets to see it. All right, that's pretty much it for today, you guys. We're going to wrap up the YouTube video. Like, subscribe, all that jazz. Leave a comment, follow everywhere. Description has all kinds of information. Check it out. Have a great day. Talk to you soon. Peace.